I told you I thought we would get the rally and complete this rising wedge because we still remain in a risk-on environment. The trend is still bullish, even though we had the pullback. Continue to predict new highs for the S&P, so it will complete the topping process. Now I'm looking for the top here. I think the top will complete in the next few days. I warned you that, again, we had a gray shaded area warning something's about to happen. I think that's going to push us higher, which it's now doing. I warned you about these other signals that were warning of a pullback. I still thought we would go higher because NASDAQ didn't fill that gap. That was correct. I think that a divergence is going to develop here with momentum. When that's done in the next couple of days, I think we will get a reversal. It may finish this week. It may finish early next week. Momentum line turning back to bullish with our breakout triangle and the rebound now to a new high. S&P daily. Same exact thing here on the NASDAQ daily. We have now the momentum line turning back to bullish with coming back up now. And again, we're likely going to fill that gap and see a divergence develop here on momentum. And then I think you're going to get your reversal. Watch the video all the way through. You want to see some amazing things. It's not the time to be falling asleep at the wheel. Odds favor we're going to get a top and start a reversal with those divergences in the weekly time frame. And that top could happen any day now. Happen this week. Maybe something next week starts a sell-off. Tensions in the Middle East, oil shock with if Israel targets Iran's oil infrastructure, refineries, and all of it. Earnings, we could see the rally at the top and a start of a reversal. Usher in a bear market. I think you got a good shot that's going to be in play. Please support the channel with the link directly below. That allows me to be able to provide you this information. You like the charts, you like the indicators. Please let me know that by supporting the channel. If you could take a moment to do that, I would really, really appreciate it. Put it all out there for free and ask that you do what you can to help out. Because I don't want sponsors, I turn those offers down because I don't want to sell you stuff. So if you could take a moment to help out, I would really appreciate it. Follow the link below to take you to a secured site. You could donate any amount you want or make it a recurring donation. If you do that, I thank you. Really be encouraging to hear from you. Please let me know that you want this information. Thank you for your consideration for that. I warned you that we would be getting a green bar. We got the bullish reversal of conditions with momentum yesterday. I told you a green bar would follow. We got it yesterday on NASDAQ. Again, divergence is likely going to form here on the MACD and on the awesome oscillator. Here in the daily time frame on the S&P 500. Warned you about momentum. We are going sideways, forming that triangle I talked about at key horizontal support. We broke out. We saw signals and momentum turn right back to bullish. But divergences are likely going to lead to a reversal in the next couple of days. The rally completes. Likely see a few more green bars, but as we peak, we'll still get a green bar in all likelihood. By the time we see a red bar, it will likely be that the top is in already. This divergence plays out immediately, which my guess is it's going to. The divergence is in the weekly time frame, but we went from a bearish back to bullish last Friday, bearish back to bullish, which again we predicted would happen, nailed it. We go a little higher, but then I think we peak. Here we are just below 5,800 at 57.92. We were up 0.71% today on the S&P. My guess is we'll probably move into the 58, maybe as high as the 5,900 area. I don't know that we reach the 6,000 target level, but again, I think we're in that window of resistance that I've been talking about. I think we could peak either this week or on into early next week. The inflation data, we've got some bank earnings, got the FOMC minutes. There was a little division about how aggressive to go the rate cuts, but again, I think you're going to complete this divergence here, and then I think you're going to get a top followed by a reversal. S&P daily chart here playing out according to plan. Green bar on the awesome oscillator yesterday on the NASDAQ. Again, we got the bullish reversal conditions, but we had a red bar, and we got above the 10 period. It flipped to a blue bar today. So again, we're coming right up here. We're right at this level right now, and I think we're just going to blow past this, fill my gap. See if we how far move above the gap fill. We could move above it. We may not. Tag it in reverse. We'll see what happens. But again, it can play out a couple different ways. We're looking for divergences to complete here in the next couple of days here, and even on the stochastic here. And then I think you're going to lower high on NASDAQ, and the S&P will get the higher high and top out. And I think that could happen this week or next week. I'm using the guideline. It goes a little longer. Using it as a guideline. I hope you hear what I'm saying. Previous rallies with the rate cuts that ended up failing, producing major reversals. Counter trend rally and reversal there in 2001 and producing a top and a reversal in 2007. Quickly, I want to just point out we still have this divergence forming on the weekly chart. I'm talking about these weekly charts. They're warning you that a reversal is getting ready to happen. Opportunity is about to present itself. Ignore the divergences, but you'll pay the price. People out there on social media saying, oh no, this can't happen. The guy just today, 2007 and 8, that was a once-in-a-lifetime financial crisis. People are oblivious to what is about to happen. And you go, oh, everybody sees this. No, people are burying their heads in the sand. There's complacency. We're rising. I've been predicting. Going to get the reality check until we get a very steep drop. When at the S&P 2022, we had a real fast drop of 15% to wake everybody up. People told us it wasn't going to happen. They said, oh, it's a great buying opportunity. Buy the dip. It's over. And on to continue crash after crash after crash of 15%, followed by a 20%, followed by another 19% after each counter trend. Again, this is warning you. The MACD is warning. Maybe we top out similar time frame to what we did in 2007. Maybe it drags on a little bit. Good. But my guess is the time is short, and I think we could see something very similar to 2007, 2001, where we have a 17 session, 19 session rally, and then we start selling off. I've been pointing out for some time now the similarities between 2007 and 2024. Also pointed out the similarities between the 2022 top and the S&P right now with the price action and the RSI. There are some similarities there as well, but it's pretty fascinating because, again, with the 2007 top, we had this sell-off right here ahead of the July peak. We had the same thing with the S&P 500. The peak here was in February. The peak in 2024 was in March, but we've had a sell-off. Rally to the July top. The July 16th top here was on the very same day as the S&P 500. They both peaked on July 16th. They both sold off to the August low. We bottomed here on August 5th. We bottomed out S&P 500 in 2024 on August 16th. So we sold off to an August bottom on both. Not the exact same day as it was in July. Both rallied up to new all-time highs, rounding the first rate cut. The first rate cut was on the exact same day, September 18th, 2007 here, September 18th, 2024, currently in our current year. That caused both of them to move to a new all-time high. As I've been pointing out, the 2007 top came 17 sessions later after the Fed pivot to form a double top. So again, about 3.5 weeks. It topped on October 11th. That's this coming Friday. It'd be something if they both peaked on the same day. Now we're going to get the inflation data. We got the FOMC minutes today. We had a rally ahead of it, pull back a little bit, and then the rally continued to close strong. I told you, I'm looking for the S&P to peak. I think it could be in this time frame between 17 and 19 days, 19 days, 19 sessions, I should say, after the 2001 rally. The first rate cuts, the Fed pivot, it had already peaked and had already dropped 19.5%. Topped, it resumed the decline. There's no denying the similarities here between now and 2007. Even some similarities with what was going on. Back then we had the subprime mortgage crisis. Began to see the problems with the banks. Banks right now have a larger or have more exposure to commercial real estate than they did to subprime mortgages. This is likely going to be the next crisis. Is going to be another banking crisis. I just want to say this. I think that we're going to peak wide because we're seeing with this topping process in 2007 similarities with right now, but we have the negative divergences in place on the monthly and the weekly chart. They're likely to play out. You got a good chance that the S&P peaks out 17 to 19 days or so after the Fed pivot, which again, the 19th day would be this coming Tuesday. I don't know that we make it there. Good. Again, it could be just before, it could be just after. Get the inflation data, again, oftentimes one up day, which again could be the CPI, and one down day. Sometimes it's both. The last time around, last month, it was both. We rallied with both, and we created a bottom, which we predicted would happen after, off with the jobs report, the previous month at the August low. So I just want to be clear. I'm looking for this guideline. And again, is it possible we peak on October 11th? Sure. It's very, very possible. That would be very, very funny. By the way, when we peaked, we dropped very quickly. In just a few weeks, we dropped 20.5%, had a fake rebound back up, and then went on to drop 58%. Oh, no, that's not possible. You know, I posted this chart on social media. Did similar charts, and I've talked about the 2001 top and the 2007 top, and I've blown them up and, you know, shown you the close-ups. I always get these comments. That was then, but this is now. Now we have AI or liquidity or you always get the "this time is different" argument. This is the same nonsense that they said back at the 2001 top. I'm sorry, at the 2000 top, bursting of the tech bubble, and with the financial crisis, with the sell-off in 2007 and 8. You always get the same people saying the same stuff every time there's a top. Herd always makes the same argument. And predicting the rally, been predicting new highs for the S&P and a rally back up to fill the gap at 20,400. We're almost there at the NASDAQ, and I think that we could peak in the next 4 sessions. I think it's certainly possible that we get something very similar to this. I told you the exact day that I thought the NASDAQ would peak, that so far that high is holding up. I'll tell you again if I think the S&P has peaked, but like I said, we're leading up into rallies going to where I think we're going with what I did with the NASDAQ. So again, I think that we're about to get another top. Nobody thinks that's possible. Talk about history here, and I talk about bear market. Oh, we don't have bear markets anymore. We're going to have the soft landing out of the Fed. Jobs report, the fake numbers jobs report, it proves we're going to have the soft landing. There's going to be no recession. It's lowering rates because they want to keep the expansion going, and it's going to go on until 2026, 2027, and happy days are here again. The same stuff. We hear it every top. Now, again, the topping process takes its time. So people get very, very complacent, but it's about to happen. I talked about the 17 days and 19 days. I've been posting little thumbnails with the videos. T-minus 6 days, T-minus 7 days. Looking around about, the 18th day, which would be this coming Tuesday, or the 17th day, which would be this Friday. But again, it is very possible that we see something similar. Again, history doesn't always repeat itself, but it often rhymes. And again, I do think a bear market will happen. I do think it will, because we know a recession is coming. But he's looking at what maybe a little bit sooner. Maybe it tops immediately. Maybe it tops tomorrow. Guess is that we're going to see a top in the coming days. It could be that we see it on the 10th or 11th, because the 11th is Yom Kippur. I've told you there's a very good chance that Israel waits to respond to Iran until after Yom Kippur. That's one of their most holiest days of the year. So they might wait until after. I've been saying, because again, the signals on the S&P 500 were suggesting a divergence would develop, that we buy a little bit more time. Now again, I could be wrong. Respond at any time. Maybe they wait longer. Maybe it's another catalyst, drives the market lower. To the volatility at a later date. I'm just telling you, look, these geopolitical issues and rattle markets. This one is likely because, again, we could see a oil shock. We could see a spike in oil. Israel targets the Iran oil infrastructure, the refineries, and all the rest of it. Could rattle the market, or concerns about a regional war. So this has potential to rattle markets, and I think that if we see Israel respond to Iran's missile attack recently, do it by next week, over the weekend, do it after Yom Kippur, well, could see markets begin to tank. I just want to continue to talk about this and the similarities here. We're being told that the rate cuts are bullish. Historically, that is not the case. The rate cuts are associated. They don't cause the crash. Associated with it, because the Fed begins to cut because a recession is coming, the market will begin to price in that recession. But again, we had a rally here with the cut, and again, we got this topping tail, and we went a couple weeks, we went 2 weeks, and we peaked 2 weeks later. Here we've gone a few more weeks, moving to a new high, moving towards 17 sessions come this Friday, 19 sessions come next Tuesday. Again, 3.5, 4 weeks later. Does history repeat itself, or rhyme, or whatever you want to call it? I think you got a pretty good shot at it. You got a pretty good shot that we might top out in the next 5 sessions. Shortly thereafter, if it goes a little bit longer, give or take, again, we're looking for clues. I think there's a very good chance that 5 sessions, actually we have 4 left now, until the 15th. But as I've been saying, I think the S&P will peak early to mid-October. And again, maybe I'm wrong. Maybe it goes a little bit longer. The guts to tell you exactly what I think. This will play out again because we have the divergences in the weekly time frame that I've been talking about. I think these divergences are going to play out. Again, it's very difficult to find a indicator that doesn't have a divergence or a triple negative divergence on the S&P 500. Well, this time's different. I'm telling you, these indicators, these divergences, going to play out. I'm warning you of higher prices. Complete the divergences. I've been predicting the rally to new highs. Getting it. Now I'm looking for the top. Divergence here, triple divergence again here. Got it here on the RSI. Again, I've excluded the shadow here slightly. Maybe we include the shadow. Maybe we overthrow it a little bit. NASDAQ did. I'm telling you, I'm looking for a peak. Now, again, I pointed out the similarities between 2022. Now, here we went up for 2 weeks and we reversed. In 2007, when we broke to new high, we went up for 2 weeks. The third week began to reverse. Here, again, I predicted new highs. We got it. And again, going on for 3.5 weeks now, nearly 3.5 weeks. Into this week, again, very similar to 2007. Now, here we broke up to new high. We've had closes above the peak for weeks in 2007. So there's not that similarity, but the amount of days are very, very similar. But again, this divergence is going to play out. And again, I think that we can reach this level, or like I said, overthrow the trend line, or even reach it here, including the shadow, just a little bit higher. I think that is going to likely be the case. There's a very good chance in the next bull sessions, and be this week. We could peak Thursday or Friday if we're seeing tensions heat up in the Middle East and Israel respond to the Iran's missile attack, recent missile attack. Be a catalyst. We're moving into earnings. We're about to get a bunch of banking earnings here. Rally this week, moving into earnings season. See earnings start creating the sell-off, not be the geopolitical issue immediately. That could rattle markets. See an oil shock or something. Big spike anyways with oil. Catalyst. I'm just trying to point out to you again, get lulled into a false sense of security. Yes, I'm saying we could peak and move into a bear market and eventually start seeing a crash like we did in 2007, but I've been predicting a rally. I've been predicting new highs because I expect that these divergences are not done yet, and I think that we're putting the finishing touches on them. Again, beautiful divergence here on the MACD. We're rallying back up and we're forming these divergences. We're getting the 9 count in the weekly time frame. The S&P weekly chart, I told you earlier in the week, we were not making new highs. I told you we were going to. And again, we had started to sell off on Monday. We got a 9 count because we were above the bar from 4 bars ago, which is this bar right here, actually on the close. And we stayed above it. We had the 9 count, but it wasn't a perfected signal, a perfected sell signal, because bar 7 was still the high of the count. I told you last week that we would likely see new highs. And I told you this week we'd likely see new highs to get this perfected 9 count signal. Now again, we had it over here, went a little bit higher. The S&P peaked right after this 9 count. Got the topping tail. NASDAQ peaked right after this topping tail the following week. S&P 2 weeks later, and we went a little bit higher. But then we saw the sell-off. This one is likely to produce a reversal because we have the triple negative divergences on the S&P, and we also have multiple point divergences on the monthly chart, which are likely forming a top. Oh no, this time's different. It's not different. No, we don't have bear markets. The Fed won't allow that to happen. It needs a recession to deal with the inflation issue. We have this 9 count sell signal that, again, very well, it may be that we get a topping tail with it this week, or on the daily chart. It could be that we peak this week or shortly thereafter, like right here. We went a little bit higher. NASDAQ went higher for 1 week. We could also see this be the peak in July. Again, I was warning in the daily time frame. NASDAQ was setting up a 9 count on the daily time frame. That 9 count ended up being the very top. Weekly time frame, this is telling you, hey, we're getting price exhaustion, like we were getting over here. But this is telling you, hey, you're likely going to get a reversal because now you have a 9-9 pattern setting up, which is a reversal pattern. You're getting all those negative divergences in the weekly and the monthly time frame. Again, everything playing out as we predicted it would. Divergences are getting finishing touches. 9 count is completing. Be surprised to see a top market by Friday or on into early next week. Wouldn't be surprised at all. Have a same pattern developing in 2024, similar to guidelines I've been talking about in 2001 and 2007 at great length and detail. The Dow's got the same count. It is not a perfected signal yet. 7 is still the high of the count. 8 or 9 has to be the high of the count for it to be a perfected signal, so there's no P above it, but I do think that the Dow will complete that, get the perfected signal, and then again, the door is open to start a reversal next week or shortly thereafter. These counts could produce a reversal, allowing those divergences in the weekly time frame. We got it on the Dow, we got it on the S&P 500. We don't have a divergence on NASDAQ. NASDAQ already peaked on July 10th, as I've warned. I told you the very day after it peaked on July 11th, I thought it peaked. I told you leading up to the peak that I thought it was about to peak. It did. We get a lower high. We're probably going to fill the gap in the next 2 sessions. Probably tomorrow we'll fill the gap with the CPI. Not by Friday with the PPI inflation data or with the earnings we're going to get. We're going to be getting these banking earnings here. And I think we could possibly see Israel respond to Iran's missile attack over the weekend after Yom Kippur, or into early next week. We very well could see markets rattled by that. And again, concerns about prices, an oil shock, a surge spike in oil could rattle the markets. Just quickly, as you know, I'm looking for an ABC move on Nvidia. I could be wrong. Maybe Nvidia didn't peak over here. I believe it did back here. We got actually in the weekly time frame a 9 count with this peak over here. Peak right after we had peaked, just as NASDAQ did the very week after. In July, here the peak was in June for Nvidia. But Nvidia, I think, again, and it had a rally today and it fizzled out and we ended up down. I told you we were going to get above this August high. We did. I told you we'd break this trend line. We did. I think that we're going to form this double top, just like on NASDAQ. I think it gets a lower high. I could be wrong, and we get a higher high and get a double top. But again, I have the guts to tell you what I think. I think it will be a lower high. And I think NASDAQ's going to fill that gap, and then I think we're going to start selling off sharply. Nobody thinks that's possible. I think Nvidia's peaked over here, and I think NASDAQ peaked back in July. They diverged from one another. Moved to a new high in July. Nvidia did not. It's interesting, as we move to this count right here, this C count, the C wave right here I'm looking for, we're about to get a 13 count. I think that will happen this week. I think it'll happen Thursday or Friday. I think we'll likely see the 13 count complete. We got bar 12 today. Just quickly, this is the Nvidia daily chart. We got today bar 12 of 13. I wouldn't be surprised to see the 13 count complete. And again, maybe we go a little higher than it. Maybe we peak with it. But I think that Nvidia was probably not going to exceed the June peak. I could be wrong on that. It could go a little bit higher. Regardless, I'm looking for a double top pattern with a lower high or higher high. Recently, Bitcoin got a lower high. At the 2007 top, the S&P set up a higher high on it. The bursting of the tech bubble set up a double top. It got a higher high. So again, these double top patterns, sometimes you get a lower high, sometimes you get a higher high. It's interesting. We're about to get a 13 count. So is NASDAQ. It's got 12 of 13. So does NASDAQ. Again, just quickly, we got up to bar 12 today with the S&P 500. Now, here we have a bar 3. Maybe this goes a little longer. NASDAQ, maybe I'm wrong about the lower high and we go a little bit higher. But again, telling you what I think. These counts have been pretty interesting. You have the 9-9 over here in the daily time frame here. Again, leading up into this 9 count, I told you to be watching to see if that 9 count marks a peak, because we're going into the resistance in the weekly time frame that I've talked about. That ended up producing nearly a 16% drop. Then this 9 count, we went higher for one more day, and then we got this sell-off, which I predicted would happen in order, again, to get this ABC move, but then we called for a bottom here with the inflation data. We got that with the CPI right there, and again, told you we were going to come back and fill this gap that has now into play. We are directly below it. I think we're going to fill this gap in all likelihood tomorrow. Maybe we hang out up here a day or two, maybe a couple days. Wouldn't be surprised to see a peak this week or on into early next week and see something very similar to what we had in 2007. Does it have to play out that way? No, but it very well could, and it could be similar. And it's a guideline, so I hope you hear what I'm saying. But I think you got a good shot when we fill this gap. The S&P is going to peak and peak at the areas that I've been talking about. With Nvidia and NASDAQ, a 12 of a 13 count here, the daily time frame. For a lower high NASDAQ, because oftentimes NASDAQ and S&P will diverge from one another at major turning points, as I've talked about at great length and detail. As we fill this gap on NASDAQ, I think S&P and goes up to this trend line and maybe, again, higher, including the shadow. If we included the trend lines a little higher, maybe we overthrow it. But I think you come up here, and I think you come up likely into the 58 or 5900 area. I think you come up, peak in the next few days here, maybe this week, maybe early next week. Of higher highs, we got the triangle. I told you we got a triangle. I predicted that we would see a upward resolution of this. I told you if I'm wrong, we go back and test the 200. We got the upward resolution. I think that takes us into these levels. The upper boundary on that weekly chart. This is a 60-minute chart here. Zoom out right here. Again, I think we'll see likely a fresh, brand new divergence. I think this divergence only gave us a pullback to the horizontal support there at the July peak, which was our previous high, and we bounced up that level of support. So again, I think you're going to see a brand new divergence develop here in the next few days before the weekends here, or on into next week, and then I think we'll see a reversal, a top and a reversal. I think you got a good shot that's going to happen. I was saying earlier, again, I'm looking at this trend line here. I'm looking at the trend line this is a weekly. I'm looking at the trend line in the daily. Upper boundary, the rising wedge. I'll show you it up close in a moment here. We got a rising wedge here in our most recent price action. Rising wedge here in January of 2022. The top there, the RSIs look very, very similar. I'm looking for a divergence to develop on the RSI right here in the most recent price action. It's now doing it. But you have this larger divergence with the peak over here, just as you had back over here. So again, I think you're going to form a top. The price action looks very, very similar as well, as I've talked about at great length and detail. So again, I think we will see a peak here in the next few days. I think we'll see the divergences play out in the weekly time frame. Herd right now is oblivious to what is about to happen. Divergences are warning you and me reversal is about to happen. It's possible we see a peak with the CPI or the PPI this week. And again, sometimes you get an update with one and a down day with the other. Sometimes you get an update with both. We had an update with both the last time around. But sometimes, so I'm just saying, hey, we might peak with the CPI. We peaked this week on the 11th, the same day that we did in 2007. But regardless, again, this is a rising wedge. This is a trend line I'm watching as well, along with that weekly chart. Again, we could reach this level. Sometimes with rising wedges, you overthrow the upper boundary. That could happen as well. But again, we're looking at our target levels. I think that the divergences will complete here. Look at the MACD, look at the RSI. You saw the larger divergences in the weekly time frame. I've talked about it in the monthly time frame, forming there as well. Here's the triangle I talked about off a key support right here, bouncing. So I think that we're going to see this peak here. And again, maybe we redefine the upper boundary and overthrow it. We'll see what happens. I think we get closer to this trend line. I think we get closer to the trend line there in the weekly time frame. And then again, we move up into the 5,800 area. We're just below it right now, maybe on into the 5,900 area. We'll see if we get a big, topping tail or something. We get a big, rally and followed by a reversal bar or something. But we'll see what happens in the next few days. But I wouldn't ignore these divergences that are developing here on the daily chart. Tomorrow we get the 13 count, possibly. To get the 13 count on the S&P, to get the 13 count on NASDAQ 100 and Nvidia, bar has to be above the bar from 2 bars ago on an intraday basis. Counts it's on a closing basis. That in mind, we'll be watching to see rally continues strong on NASDAQ to fill the gap as I expect it will tomorrow. If so, get that 13 count down sell signal on both Nvidia and NASDAQ if the rally continues and we see it close above the bar from 2 bars ago on an intraday basis. The Dow's not at a new high yet. I think it will be in all likelihood. Again, we've got a major trend line, 125 years old in the monthly time frame in this area. I think we'll see the divergence likely complete here. Probably another divergence between the transports and the Dows. I've talked about, don't have time to show you that. RSI and the MACD also forming divergences on the NASDAQ. Again, I think they're likely to complete this week or by next week. Latest, again, I think that you got a divergence here. And again, as I've said, we may just move to a new high and the extreme might be a peak. Seen that with the RSI before. No divergence at this low right here, just reached a new extreme. Certainly possible, but we could form a divergence. One is still in play here. I think you're going to fill this gap right here on NASDAQ, and then I think you're going to peak. Now, maybe we overthrow it and we go up above 20,398. Maybe we go up to the 20,500 area. I don't think you're going to exceed the 20,007. This peak right here is just under 20,700. I don't think you're going to exceed that. I think you formed the double top, as I've said, but I think this is going to complete in the next day, 2 or 3 or 4. And again, 15 days, 15 sessions, I should say, after the Fed pivot. 17th session is on Friday. The 19th session is on Tuesday. We have a similar timeline. I think that is a guideline peak on the S&P 500 and for this lower high to set up on NASDAQ. And it looks like right here that we've come right up to this area right here. Again, my guess is we're going to plow through this area, fill that gap, and likely see a peak. A lot of people, attention to gaps. Again, we may hit it and start to reverse. We may overthrow it a little bit. We may dance around this area for a little while. We don't know. It could be there for just a moment. It could be there that we're there for a little while. But I expect that that gap will fill. I don't know if it will be on an intraday basis or a closing basis. We'll see how it unfolds. You see the divergences developing on the daily chart. You can see the divergences on the S&P weekly. You them on the monthly. Got a good shot that a top develops. Coming recession, we have the Fed pivot, which has been associated with the bear markets and the market reversing in the past. Not that it causes it. Fed starts lowering rates to price it, to combat a recession. The market starts pricing in the recession. So they are associated with one another. NASDAQ closed at 20,268. So it's about 130 points away from filling that gap. We're about 0.65% away from filling that gap. And again, we'll see if we overthrow it or just tag it in reverse. But I think that this is where you're going to see the turn at. I think we'll end up completing a larger divergence here. Pring parameter, I think we'll complete it right here in the 60-minute time frame. I think you'll see it on the MACD. I think we'll see it on the RSI here, or we can form a brand new divergence. So it may be that we just form a divergence with this peak over here. We'll see how it unfolds. But this is what I'm looking for. I'm looking for this push higher, and then I think that we're going to peak out. I think that will cause S&P to hit the resistance levels I'm talking about. The S&P will peak at a new high. I think NASDAQ will get a lower high. I think we'll see a top. I think we'll see a reversal. Predicting the rallies here for S&P and NASDAQ, but again, now we're there. So now it's time to be looking for a topping process to complete.